Welcome to Alpha Bytes. I'm your host, Marconi White, and we've got a show hotter than Fundstrat's latest 180,000 Bitcoin price target. That's insane. I'm going to ask, when will Bitcoin finally conquer the 32,000 resistance? Ben Lilly explains why your playbook needs to include never fade the Fed. Ray looks at the real truth behind perpetual tokens. King Kodi, well, he goes down the real world asset rabbit hole and discovers a Trojan horse. I know it sounds scary. And stick around to the end. You're not going to want to miss this because I'm going to ask each of the guys what it would take for them to get scanned for the Worldcoin orbital. It's going to get personal. In the studio, I've got Ben Lilly, Ray, and Kodi. Gentlemen, welcome. Let's get started with the market update. Ben, last week you were with us. You were talking about some concerns you were having about softening in the market. Last I checked, we were under 30,000. Tell us where we're at and where we're going.
You got it. Well, thank you, Marconi. I'll do my best here to fill in JJ's janitorial rubber boots here. And for everybody listening, Marconi asked me to also swing the mop around, so I'll try to start off strong here and say that the market right now has to be dictated by the dollar. And as I'll show in a minute, that we need to keep an eye on it as we move forward. So to start off, we'll take a wide view on macro and the dollar and then bring it down into crypto. So starting off this week, we have the FOMC meeting. This is where the U.S. Federal Reserve convenes on what to do with interest rates. Currently, they look set to raise rates by 0.25% to 5.25%, 5.5%. And the CME is reporting that this will happen with 99% certainty. And it's been that way for a couple weeks now. So this shouldn't be much of a surprise for the market. So while it might seem like it's going to be a nothing burger meeting, what we should keep an eye out for is what will happen during the press conference that follows. So what we want to listen for is any discussion about terminal rates. Terminal rates in this scenario would indicate the Fed believes we can stop raising rates for the immediate future and sort of let things settle in and let the economy start to take off and gain its bearings. Now, this would help with those allocating capital to do so with greater confidence, knowing that the rates won't have any major changes moving forward. And right now, it seems like we are near that moment of terminal rates, but perhaps there might be one more hike happening in either November or December meeting based upon what the federal funds futures are showing. And before we, likely in 2024, at least what the futures market is saying, we might see that cut happening around the March timeframe. I don't have too much confidence in that cut quite yet because that continues to be pushed back, but that's what the market says, so we kind of need to run with it for now. So the dollar, King Dollar, what are we talking about here? I have to believe this would lead to a softer dollar moving forward. I'm talking about the federal funds rate having an uptick of 25 basis points this week. So when rates were rising at breakneck speeds last year, the dollar went on a tear from 90 to 114 as measured by the US dollar index, the DXY. In October of last year, the Fed finally started to ease up on the gas pedal, and the dollar began to ease up, falling from above 110 to 100 in a matter of months. And earlier this month, the dollar dipped below 100 and is now trying to regain its prior trading range. The reason we care so much about the DXY is that the dollar is still and likely will continue to be, for the foreseeable future, the global reserve asset and acts as a barometer for all assets moving forward. So whether or not the DXY can regain the 102 level is indicative of a larger overarching trend. So right now, I'm leaning towards a bearish continuation of the DXY. The question really becomes whether it will happen sooner rather than later. So that's the Fed, the rates, and what's happening with the dollar. So zooming in a bit into crypto, Bitcoin has been trading between the 31,500 and just under 30,000 since June 21st. Finally, we got a little bit of change in direction here. It happened 5 hours before the New York Open on Monday. Bitcoin dropped just about 3%. In the ETH, went ahead and dropped 2%, while altcoins were down 2.5%. This was interesting only because Bitcoin fell the most out of those three right there. So that leads us to pull up Bitcoin dominance chart, and we can see ever since the XRP court case verdict with the SEC that Bitcoin dominance has been rather weak. But it now looks to have dusted itself off and looks ready to have a bit of a run. It's still, for any of those that have been listening the past few weeks, we haven't really had that ETH BTC capitulation. We've all kind of been keeping our eye on that chart to see if it trends lower and sort of has a bit of a, like what we call puke, but it hasn't happened yet. So expect Bitcoin dominance to perhaps fill up that gap on the XRP ruling. So that's where the crypto market is. And to quickly sum up a few more points before letting Ray chime in about some on-chain data, we didn't really see much OI change for the futures. The September quarterly expiry looks to be the one with the most interest in the options market. The one for July this week doesn't show that much volume attached to it. As far as liquidation levels to watch for Bitcoin, 28.4K for Bitcoin looks to be an area of significance to the downside. Wouldn't be surprised if we tack the liquidation level at 29.6K to the upside before we go ahead and have that bearish continuation to the downside. And that's, as far as the update, that's about it. To sum it up, DXY trying to set the trend by reclaiming its range, looking out for what Jay Powell says at the FOMC meeting this week, and then keeping an eye on Bitcoin dominance to see if it decides to fill that XRP ruling gap. And that's about it for me. I'll hand it over to Ray, unless Marconi has a few words.
No, that was a fantastic update, bringing together all the data points. And I think you gave me some answer to a question. When are we expecting to go back above 32? It looks like we need to go south before we go north. Ray, I do want to hear from you. Most of what was just shared paints a little bit of a bearish picture, at least in the near term. What about, are you seeing a divergence with what you're seeing on chain?
Well, in addition to what Ben said, basically the one-liner here is that some Bitcoin whales are dumping on us.
Okay. So we're actually seeing some whales walk away from the market, at least in the near term.
I think they're traders. So, if I was holding a big stack of Bitcoin, there's some I would be long on and would try to earn yield from. There's some I would hedge by playing around with, options markets. And then there's some of it that I would just trade within the market to try to create more Bitcoin from that trading. So what I see right now is that Bitcoin whale exchange inflow, that share, hit a 1-year high at over 40%. And that's the highest uptick in exchange inflows volume-wise since June of 2022. And we also see that short-term holders have also become increasingly active. And these short-term holders are defined as holding coins for a maximum of 155 days. And at the moment, the largest volume investor cohort within the short-term holders are Bitcoin whales. So according to recent Glassnode analysis, they've concluded that the most recent trading activity is driven by whales in the short-term holder cohort. There's also another metric, and that's the whale to exchange inflows metric, and it shows whales ramping up their exchange activity, most recently in July, to account for 41% of inflows. So beyond the kind of on-chain factors, it shows whales putting Bitcoin on exchanges and exiting short-term trades, which if you're trading Bitcoin from the downside to upside over the last 155 days, I think the data shows that you're in profit. There's reasons why traders that are trading might be taking profit right now. And I'll just really briefly go through those really quick. Bitcoin miner inflows to exchanges, we saw an uptick in that consistently over the last 3 weeks. There's the FOMC expectations with the CME FedWatch tool currently showing that 98.9% of investors expect the Fed to raise rates this week. Price loss momentum at 32K. And as Ben and I mentioned in the previous week's episode, there's liquidity to grab on the downside, and that's where we see price going. In my view, this is just normal consolidation, price action, and on-chain data shows holders and long-term investors still buying in this $30,000 zone. It's an accumulation zone, as per the on-chain data. Like for many, many, many weeks, many months, they've viewed 30K as a zone to accumulate. I think another thing impacting price in the short term is that the SEC has threatened to contest the recent federal court decision that XRP programmatic sales were not a securities issuance. So we were all happy and euphoric about that and saw the market react to that. But now the possibility of Gensler and the SEC, basically saying, hey, we want to have another go at this because we think otherwise. Well, that's kind of that's raining on the sunshine party. So that's what's going on with Bitcoin this week. It's just reacting to the macro calendar and to resistance at 32K and to just news events on the regulatory side. But generally, this is just more of the normal pre-halving price consolidation that investors should expect.
Yeah, I like that last part. This is exactly what investors should expect. Now, I know the listeners of this show, as it's a new show, we've got the bear market warriors, the ones who have, if this is your first bear market, welcome. We're there with you. If this is the second or third market you've been through, you're expecting exactly what Ray just said. This is exactly what we would expect to see prior to the halving. I did want to follow up on one point, Ben, before we go on to the radar. In several previous episodes, you had shared the max pain point, which was obviously much lower than I think what we talked about today, which was more in the 28,000 range. Are you still looking at that or not?
So are you asking if I'm looking at that max pain point right now?
Well, in general, we had talked about that as sort of the lower threshold or lower bound of what price may go. Is that still something that's on your radar, or are you really just expecting us to kind of get down to that 28,000 range before we have an impulse higher?
Well, like long term. So when it comes to max pain, like I'll start looking at that figure if it's an options expiry that shows considerable volume. And this one doesn't really fall on that for now. The September one, that's probably going to be an expiry to keep an eye on. Those expiries that have large volumes attached to it can sometimes be, what's the word? Almost like a pressure release valve for the market and price, so that it can go ahead and kind of figure itself out again. So that will come up later. But for right now, my eye is on the 200-day moving average. I've kind of been using that and following where that is relative to various liquidation levels. Like those two are starting to converge. My longtime thesis since probably January of this year has been that in July or August, especially with the Fed now rolling out, summer happening and the timing relative to the next halving, which is in April of next year, that we should test the 200-day after we break above. And then once we go ahead and retest it, say within a year prior to the halving, we will go ahead and fail at that retest and go below it. So I still expect that as my base case, and that sort of be that last, give it 4 to 6 weeks of the best time to go ahead and start accumulating to move forward into the market.
Okay.
So that's still there. That's
still there. Just more of a longer term view versus I think what we shared this week, very more near term. So there you have it, folks. If you're looking for some near term price action, I take what Ben and Ray had to say into consideration as you're looking at your trades. Obviously, nothing that we share here is actually investment advice. We're just a couple of avatars sharing our perspectives, but hopefully you get something for that that's useful. Let's go ahead and move on to the next topic here. Ray, you've got some interesting data looking at the perpetual tokens projects and asking some questions about their tokenomics. So do you want to go ahead and tell us what you're looking at?
Sure. Perp tokens project value, but it's going to boil down to and this is going to be a trigger alert for Ben, tokenomics.
Oh,
so let me rephrase that. Yeah, token economies or their token economics. That's what it's going to boil down to for these perpetual token projects, which we see listed on numerous decentralized exchanges.
When you say it's going to be boiling down to that, give us an idea of what you're looking at there in terms of either the volume or the fees. What exactly is on your radar from that perspective?
Well, I actually want to preface it by briefly talking about the Worldcoin launch that happened yesterday. So this Worldcoin launch looks to have been a success for early investors or VCs, and possibly for the folks who received that drop. And could sell it at exchanges. But generally, it's come under heavy criticism, and possibly for good reason. So all irises and ideology aside, I know, right? You get that? Yeah. Worldcoin's token distribution raised a lot of eyebrows yesterday. Let's go through it real quick. This token's circulating supply versus supply cap is startling. With only 1% of the total 10 billion token supply currently in circulation, Worldcoin had a fully diluted market capitalization that exceeded 28 billion at one point yesterday. That's immense, but it's also ridiculous. And fully diluted valuation, or FDV, it's the total market cap valuation if all tokens from a project were in circulation right now, right? So these tokens have a 1-year lockup, if I'm correct. And then after that, it's unlock and dilute time, assuming that anyone in retail is actually holding them. But beyond that, I don't want to talk about Worldcoin. I just wanted to talk about DEXs, particularly dYdX, because there's some similarities and some differences, some obvious differences between Worldcoin and dYdX. I don't want dYdX tuning into this and saying we're a whole bunch of idiots and threatening to sue us. So I want to make that distinction, right?
I appreciate you clarifying for the audience. Yes, thank you.
Yeah. So DeFi perps or decentralized exchanges are slowly increasing their volumes, and they continue to absorb market share away from centralized exchanges, but it's a tiny amount. Currently, it's at 2.1%. And in previous episodes of Alpha Bytes, we've discussed our views on GMX, which is another DEX that offers perpetual contracts. So you should go listen to those episodes. I don't know which one it was, which means you have to listen to all of them. But anyhow, dYdX is pretty much the leader in DEX perps. But if we look at the chart that I provided, it shows that their token supply is 1 billion, with 170 million dYdX tokens in circulating supply now, right? On the other side, GMX has 13.2 million as a supply cap, with 8.9 million coins in circulation, and SNX, another DEX with perps, has 320 million tokens, which are in full supply circulation right now. So without making a comparison between Worldcoin's FDV and dYdX, let me just say that dYdX, their FDV is 2 billion, and dYdX token is trading for $2.04 right now, whereas GMX is trading for $53.80 right now. And at the moment, dYdX token doesn't have much utility. It just gives traders a fee discount, but that is set to change as staking goes live with their V4 launch and their move to like Cosmos blockchain. So staking is meant to spread trading fees to validators and delegated stakers, but the caveat is some serious token unlocks are happening in December of this year. I was looking at some data on tokenunlocks.com, and there's like $1 billion in token unlocks happening in December. And if I'm wrong, audience, correct us on that figure. Just drop that in the comments and let me know I got that figure wrong. But it is an immense amount of tokens that unlock in December. So in the short term, to wrap this up, this unlock is bound to put some serious pressure on price. But given DEX's increasing market share and given dYdX's increasing market share among DEXs itself and its plans to launch staking and a direct exchange and trading fee revenue to stakers, and the trend of coins leaving centralized exchanges and going to hard wallets or DEXs, this could possibly be an opportunity to keep kind of on your radar with dYdX. Right now it's trading at $2, down from an all-time high at like $35. This huge unlock is possibly going to put some negative pressure on price. We know what's coming with dYdX in terms of what they want to do. We know what the trend is with centralized exchanges having issues and losing coins and losing market share of trading. We know that trading is eventually going to go to institutions and to Coinbase and to whatever crypto exchanges or brokerages China favors. So it's kind of a no-brainer that dYdX and other decentralized exchanges stand to absorb a lot of that volume from the like aggregate crypto market. So after this big unlock, if that smashes price to $1 or something like that, it could be kind of a no-brainer trade. But of course, that is not financial advice.
Not financial advice. So I want to just summarize what I'm hearing here. So when we look at the chart that you've shared, which is a great layout, as an investor in this, obviously one question would be, what is the utility that I get from the tokens? And you express some views on perhaps what dYdX offers. And I think the audience can look at what SNX, GMX, and VRTX offers as well. But beyond that, you have the real risk of being completely washed out as the token unlocks come out. So you need to be looking at the fully diluted value of the token when those unlocks are happening. And I sense that the pressure in the marketplace is going to move away from the marketing spend that an exchange or any project can offer and move more into utility and a better economic model if they want to sustain market validity, if they want to be able to keep investors. It seems to me that you're going to get washed out on dYdX at some point unless there's a massive magnet that's going to take up that supply. Or am I missing something?
I think that's correct. And what dYdX could do is look to GMX and look at its GLP and staking and liquidity provision model to see if there's ways to incentivize stakers or holders to hold the token. I think GMX is a good example of that. But then at the same time, I think after December of 2023, the unlocks begin to slow down.
Okay, that's good perspective there. Well, I think this is, again, excellent consideration for investors when they're looking at which of these to actually hold on, which can be separate and distinct from where you're actually looking to place your trades for a variety of reasons. So, Ben or Kodi, any thoughts before we move on to the next point on the radar? Okay. All right. Well, I want to move on then to Ben. You obviously gave us a lot of detail and data when you did the market update, and it looks like you still have a couple of elements here to share and giving your perspective on why you don't want to fade the New York trend. Open up and tell us what's on your radar, Ben.
Yeah, sure thing. So don't fade that New York trend. It's been something we've been watching for quite a while, several years now, just whenever it comes to the time zone. And this is all predicated on the fact that each Asia, Europe, and New York have separate 8-hour time zones. So based upon which time zone is showing any returns or any losses, then you can kind of see trends that take place relative to who's trading in those hours. And when it comes to the New York time zone, whenever we see Bitcoin showing good gains over a long period of time, and even those impulses in gains, those tend to be something you follow along and you don't fade it. That's really what I'm trying to get at today. And what we're showing in the recent time zone chart is that the current trend has actually been declining since really the beginning of July. And then when we see that New York trend start to decline, it takes some time before we start to see that materialize in price. And pulling up, let's see, I'm just going to blast this current tweet that I was just drafting so I can go ahead and look at the chart that I wanted to look at for this call, which is the last time that we saw these trends to the downside. Pulling it up now, we got August 10th, and shortly after, just about a week later, price started to trend down for the following month. Next up, November 4th, it only took about 3-4 days to have a sell-off, and we started to bottom out, as everybody knows, from the FTX debacle. And early March, we had a nice wick to the downside that followed the week the week after that. And right now, I'm showing about July 11th, kind of as this mark as when this began to trend to the downside. And so now we're getting closer to the end of July. I would expect, if this trend is to continue, to see a really sizable sweep to the downside. And there's one indicator that's kind of letting me use this as a cheat sheet, if you will, which is the ROSI indicator. So that's the reversal on-chain sentiment indicator. Those that have been following the work at Jarvis Labs for a long time probably are familiar with this metric. It tends to be decent at calling bottoms and reversal points on price. And it recently flashed a level 3, which is like a mild indicator that a bottom might be approaching soon. It's not saying that the bottom is here. This took place on that sell-off this week that I alluded to earlier in the podcast, that right before the open on Monday, we had a good sell-off. So I'm waiting to see a level 1 indicator on ROSI, which would likely happen and coincide with a strong sell-off.
So you've got some more confluence to look for before you're willing to actually call the bottom.
Yeah, I would expect to see a continuation here to the downside. And most of this is, we just need to have, I think the way I framed it last week was, the market just needs to grab price, by the shoulders and two hands and just shake it and reinvigorate the market in order to, if it decides to go to the upside and test new highs for the year, like, we have to go ahead and do that. But there's also the scenario that I was mentioning where let's go ahead and break that 200-day moving average to the downside and start to prepare and get ready for the rally that will be coming, with post-halving, if you will. So I'm open to either scenario. I'm leaning right now, at least for the near term, to the downside. Are we going to go ahead and get back up into the prior trading range and test some new highs here? Or are we going to just continue trending lower? Like that sort of thing, I'm not ready to make a call on.
Okay.
So it seems like...
Go on, Ray.
Sorry. It seems like your view on the short-term price bottom is kind of aligned with FOMC this week. The fact that we're probably going to get an interest rate hike. DXY has basically retapped at 20 MA on the daily, gone from 99 all the way back up to 101.5 today. So do you think that the start of that new rally, like what sort of non-Bitcoin price specific catalyst do you think will align with bottoming and a trend reversal as we then get bullish and attempt to grab that 35K handle?
That's a great question. And I was literally thinking about that this morning. And what I came to was the fact that we've had a ton of catalysts. We've had a ton of bullish catalysts take place. I mean, with the XRP ruling, that felt like one of the most bullish and significant events that we could get from a regulatory landscape, except a Bitcoin ETF approval for at least this year. And knowing that and understanding that this SEC approval for an ETF won't be happening likely in the next month or so, what else is there to look forward to? And I don't have a good answer. I kind of came up blank, and because of that, all of the kind of bearish confluence points that I was referring to led me to kind of accept it, at least for now, and wait to see if anything else materializes. I mean, even I got the bull bear indicator that we have in-house, and it's still above 0, which indicates the market is bullish, but it has been trending down for a significant amount of time. And just like I keep mentioning, prior to halvings, we kind of get the 200-day moving average failure. Same thing with the bull bear indicator. It dips into bearish territory before it kind of gains its energy and momentum again and moves back up into the bullish side.
Do you feel like Bitcoin's doing its own thing now? Like, I'm sorry, Marconi. This probably is a question that should come from you.
No, that's fine. That is a group team effort here. Go on, Ray. I want to hear what you had to say.
It just feels like the market makers are kind of gone. Inflows into crypto are down. If we look like on a year-on-year basis, right? Like inflows into crypto now are nothing what they look like at the peak or this time 2 years ago. All the biggest exchanges are no longer like massive holders of Bitcoin anymore. We know that regulated institutions hold a large stack and that MicroStrategy holds a large stack. This week we see whales and miners exerting pressure on Bitcoin price. Prior to that, it was spot-led or retail-led rallies, which were leading Bitcoin's price discovery. So to me, it feels like Bitcoin's kind of doing its own thing right now, completely agnostic to macro and agnostic to the regulatory FUD. It might impact it by 1 to 3% in the intraday, but generally it seems like the consensus is price go up no matter what, right? So Ben, do you feel like Bitcoin is starting to dislodge from macro and from like regulatory chatter?
Oh, that's a good question. And I'm kind of leaning towards no at the moment, only because I don't think anything of significance in a macro sense has really happened. But once it does, I think Bitcoin will respond. Right now, the volumes are very low, as you mentioned, and it won't take much for the market to really go ahead and have this bullish follow-up to any news, but we just don't have it yet. I mean, the market almost feels like it's moving into zero gravity space at the moment. It's doing its own thing. And yeah, right now, the macro, the equities, Bitcoin, this very uncorrelated at the moment, but it usually takes an event of significance for correlation to start to take place across various asset classes. And I wouldn't say that's not going to happen soon. But if it does, it won't take much at the moment for Bitcoin to really gain momentum, only because it doesn't take much right now to go ahead and move price in the market.
Yeah, thin order books. I think for many, this can feel a little disheartening as they're waiting for the bull market to return in full force. And I joked at the beginning of the episode about Fundstrat's recent estimation or price speculation of 180,000 within, maybe it's even 2023. But on the flip side of it, these are fantastic moments to be looking at your investment and trading strategies and asking yourselves, how do I maximize my investments here when the rest of the market is not paying attention? So I would ask that everyone and suggest that to everyone who's listening. Ben?
And if I could jump in, because that's such a great point. I mean, it might feel a little disheartening right now if we're going to be talking about the lack of liquidity in Bitcoin, how little it takes to move things, possibly the low count in terms of bullish events on the horizon. But we keep mentioning this, let's say, ETH BTC chart. We haven't seen the capitulation moment to where ETH will begin to overtake Bitcoin price action, and then eventually the rest of the market will go ahead and move down that risk curve and find smaller cap tokens with higher upside potential. And what that really means is there's so much opportunity coming down the pipeline. You need to prepare. You need to be checking out these projects. The distributions, emissions, token supply over time with these projects that are of interest to you. Because if you can find a good basket of tokens that you have high confidence in and the economics look good, and perhaps it's almost positioned to have a supply shock, and so that way it has great price elasticity to the upside, you need to know what they are now. And that way, when those moments that we keep alluding to happen in the market, you'll begin to scale in and you'll be able to take basically home all of the bread, if you will. And so you need to be paying attention to Kodi. You need to be paying attention to what Ray's talking about and some of the other guys when it comes to these token projects and what's going on there. And that's, I'm just sitting here observing just like everybody else what these guys are saying and taking it in and saying to myself, like, oh, that might be a project that I want to start to think about and go ahead when this moment arrives, like go ahead and get invested in it.
Absolutely.
Hey, Ben, I 100% agree with you. When she runs, she runs. When it blows, it blows. So when the price action heats up and the prices are going nuts, that's when people start freaking out. And if you don't have a plan by then, that's where you make mistakes. I just want to say, from Bitcoin hitting a new all-time high in 2020 to it going to that 69,000 high, it was 100 days. It was 15 weeks. 100 days. It was 3 months. That's how long it took Bitcoin price to go from 20,000 all the way to 69,000. So that is incredibly fast, and it was super volatile, and it was parabolic. And if you weren't expecting it and didn't have plans, you didn't make any money there, or you lost a lot of your money there. So the down times and consolidation times are good times to think, strategize, and maybe accumulate.
Yeah. Yeah. And I couldn't agree more with you guys. So this actually is a great point to transition to hear from the always quiet but purposeful Kodi, who's waiting in the rafters ready to unleash his gigabrain. Kodi, we got a couple of like-its and spike-its. Are you ready to share with us what's on your mind?
Let's do it.
All right. Fantastic. So the very first one I see here, we got one, Unibot and Maestro, 2 Telegram Uniswap snipers cracked the top 10 by fees and revenue. Like it or spike it?
Have to spike it. Okay, so let's see what these two projects are. Basically, they allow you to trade through Telegram at the push of a button. So before you had to go on your Trezor and then log on to Uniswap on the front end. Maybe if you're a bit savvy, you do it from a script or not. Now you can just do it from your Telegram. So that's good. They have also gotten a lot of success. Like if you look at fees by Unibot, over the last week, it was like 1.5 million. This is coming from as low as like 20,000 in May. So the increase there was insane. And like it's pulling as much revenue and fees as say, or like comparable to Synthetics, MakerDAO, so the heavy hitters. And Maestro was similar, like 2 months ago or something. Maestro kind of dropped the ball by not having a token. Unibot kind of snuck up on them by releasing a token and distributing fees. But yeah, all this sounds great. So why don't I like them? The reason I don't like them is because it's sad to see that the two of the most successful projects in the last months are just circular projects for like degen trading, and they are also very unsafe. So when you log into Unibot, you are given certain addresses to trade from. So and you do not control those addresses. So Unibot says that like they are not going to use them, or they are only yours to use, but you don't have the private keys, or like the private keys are in their hands. So if they want to compromise your funds, they are free to do so, basically. So yeah, that's why I have to spike it. I think something like this, better in a better engineered way, more secure way, would be great. But for now, I just do not love these solutions.
Okay. I like the breakdown there. You highlighted some of the good and obviously highlighted what makes it bad. All right, let's move on to the next one we got here. Reddit potentially adopting Web3 capabilities with 2 fungible tokens, Moon and Brick. Like it or spike it?
Like it. So Reddit has this thing. Reddit has this thing called community points, and these are points given by each subreddit as karma points, basically. So they are phasing out the Web2 points were basically just numbers on a screen, and they are now giving out these community points, which are actually ERC20 tokens that are living on the Ethereum chain. They also have a wallet called Bolt, and of course they also have NFTs. And up until now, they were not. It felt like they were not clear that they were going to move through to Web3. It didn't say on their terms of agreement that you could actually trade these tokens, but they updated those terms, and now you're free to trade them. So it's kind of implied that they will move to Web3, and I think one of the reasons is because they have they were being hard on the revenue. As if you're not aware, they were having some issues with a lot of creators, like that were not happy with them. They closed a lot of the subreddits, and Reddit was starting, and they were not making as much money as they were making before, and they are soon to IPO, or at least they're supposed to. So they got to increase these revenues, and Web3 or like a switch to Web3 would definitely help them there. So these two tokens. Yeah, what's that, Marconi?
I was laughing because I'm thinking that everyone in the last 9 months is pivoting to AI, and Reddit's leading the group pivoting to Web3.
I mean, if someone is going to be successful, it's them, right? Like they have the community, they're already using karma points, which it's just like, it's so easy to change. Right now, it's a bit of a hassle to use those points, like community points, because you have to get the private keys from the vault and like open a new wallet, or like open the wallet on Arbitrum Nova, which most people haven't even used or like heard about. But it's definitely possible, and I think in the coming months they're only gonna move more into that direction.
I like it. I like
it too.
Let's see. Let's continue to monitor the progress, right?
Yeah, pump our bucks, Redditors.
All right, we got one last one here, and I'm really excited here about this one. Tangible, an NFT marketplace for real-world assets, creates the Real USD USDR backed by real estate with native yields of 7.5%. Like it or spike it?
Like it. So Tangible is a marketplace for real-world assets, and right now they have gold, they have wine, they have real estate, and they have watches. The way it works is, say you see a watch you like, they have Rolex, for instance. You can also buy gold bars or some nice bottles of wine. So you see one that you like, you pay the price, and then Tangible will buy that from their provider, and then safely store it in a vault. So it's more of a speculative vehicle. But what I really like, aside from speculating on wine or gold, is the fact that you can trade real estate, and the real estate that they have on the marketplace already comes with tenants that they are paying out fee, like rent to you, and that rent is paid out to you in USD in real time. So that's a great way to get into the property market. All the properties are in the UK, as far as I could see, are all the properties that are on display right now are in the UK, close to Sheffield, if I'm not mistaken. And they also have this stablecoin backed by real world assets, again, mostly real estate, that is also providing income to them through rent. And is 50 to 80% real estate, then DAI, and some protocol on all liquidity. That's the backing for USDR, which is real USD, how they call it stable. And if you look at the chart, it's just like up and to the right. I think it's at a market cap of 50 million now, and it's just growing and growing. So stablecoins are one of those things that if they get to like critical mass, they are likely to succeed, at least maybe not as much as USDT or USDC, but like if they get upwards of like 500 million or 250 million, they are going to be successful, and they are like coupled with the real world asset marketplace. I think Tangible has a shot at being one of the successes of the next bull market.
I found this project absolutely fascinating. You brought it up on the radar, and I did a little reading before the show started. And I think it was from their website. They mentioned that fine wine has actually outperformed the S&P 500 over the last 20 years. So obviously they're pushing the idea that in terms of investments, you can fractionalize some of these assets, expand it to a much larger party, and those are actually assets that are going to do better. So as a diversification of your portfolio, this could be a very attractive play for many people.
It can definitely be, but it's one of those things that you can kind of want to be early, because part of the reason of why they are so why they outperform traditional markets is because it's really hard to get into these markets. It's same as the art market, same as any non-fungible market that is only very wealthy people have access to. It's that same lack of access and like lack of liquidity and like obscurity that the market has that makes it outperform basically. So the moment that becomes a market that pretty much anyone can access to and like is fractionalized or not, it's likely that part of that outperformance declines, if not like decreases or like completely goes away.
Well, I assume with the wine, the hardest part is not drinking it, right? That's good, real.
Yeah, they don't send it to you. They keep it in a bowl. That's not an issue.
That's hard because if it's in my house, it's not going for more than a week.
Yeah.
All right. Well, appreciate. So we got one spike and 2 likes. Kodi, that's always good to have your perspective on some of these emerging projects. But I want to continue on to the next segment, the deep dive, but continue with you because you just put out a really interesting piece, the Trojan horse of real world assets, in which you were looking at these types of projects. I want to just ask you, for the audience who maybe didn't have a chance to read it, what were you looking? What drew you to write the piece, and what were some of the implications that you found after doing the research and writing it up?
Well, I guess one of the reasons was that I was trying to get some yield on the money I have in the bank, which is a bank here in Europe, and there's no way for me to get yield on that. They have a yield product, but their yield product literally gives out 0%. So I was quite bummed about that. And then I was looking into, okay, can I buy a bond directly from Treasury Gulf Direct? And I don't think I can. Or at least I couldn't figure it out. I think there's ways for like non-US residents or citizens to get exposure to bonds or buy bonds outright. I'm not sure you can buy a bond outright. Anyway, I just want to get that 5% steady from the United States government. And there's no easy way for me to get that right now. Right, so I was like, hey, yeah. And I don't know, DeFi crypto is supposed to, how do we say, it's supposed to democratize the financial system and whatnot. So like seeing projects that actually give that to users, I think it's great, and I think it's going to be very successful. For those that don't know, in the piece, we looked mostly at projects that are giving access to the yield for US bonds, either through ETFs or they buy the bonds outright and they give you that yield. And you basically just buy a token on chain that represents a claim to that bond or that ETF, and you get that 5% yield in real time. It's as straightforward as that sounds. So right now it's quite small a market, also because there are quite a bit of let's say gates still. Like you still need to be a US resident or citizen to trade some of these products. But I think in the coming months it's going to open up, and we're also going to get some degen protocols on top of that. One of them that is discussed in an upcoming article already has some of that. You can basically go lever your yield on, or go lever that position in bonds, which is a bit, I mean, I'm not saying you should do that, but if you're going to go levered on something, US bonds is one of the best things to go levered on.
Sure. Yeah. A little scary when I hear the lever, memories of 2008. Ray, I want to ask you a question here. When you think about real world assets, I know I've asked you before on this show, what do you think about GameFi? Is that going to be a new area? And I think you were mostly not so confident there. What about real world assets? Do you see this as a large area that could drive the next billion user adoptions for crypto? You may be on mute, Ray. Okay, I'm gonna move on. Ray.
Yeah, go ahead. Sorry, I was on mute.
Oh, okay. Just to re-ask that question, what do you think about the potential for real world assets coming to DeFi to be a game changer for the space? Yay, nay?
Yay. I read Kodi's article and I thought it was great. I agree with him. The more the merrier. There's plenty of room in DeFi and crypto for institutions and for retail.
All right. I like that. Ben, I'll ask you the same question, and then I'll just tack on another question. What are you looking for in terms of adoption, or not, if you're going to say that it's not really going to have a huge impact?
Yeah, I think it's a great thing. Just to be real quick to the point there, mostly because these tools have predominantly only been available to high net worth individuals, especially in the equity markets. Being able to go ahead and put your unused cash into a vehicle to earn decent interest and then potentially use that as collateral to perhaps go ahead and hedge some of the other parts of your portfolio with it, it's a pretty incredible tool. And most don't have access to it. So when we think about moving some of these real world assets, such as treasury bonds on chain, that opens up that possibility to go ahead and through possibility of one protocol in that bond sitting as a token in your wallet to now go ahead and use it as collateral on some other protocol. Maybe you want to go ahead and take some insurance by buying a put on some protocol, using that as collateral. I think that's a really valuable tool, but the sophistication, obviously, in a degen environment is probably not the best recipe for success on that asset, but I think it might come in time. So I wouldn't necessarily just hold it against all the degen mentality that's out there, especially because a lot of this has to be KYC'd at the moment. So those that are willing to go ahead and do that probably are not going too far down the degen spectrum. So I find it really positive. As far as how bullish and what would I be looking for, I would want to see just constant and significant AUM. I think we would need to see a lot more composability across the ecosystem. And if that takes place, then that will spark the flywheel for more people to want to go ahead and get involved if a lot of protocols are bringing that interoperability into their system.
Okay. I think those are good metrics to be looking at. I was drawn to the point you were making about the fact that it's currently most of these assets are gated today to high net worth individuals, usually what we refer to as accredited investors. Those rules change periodically, not usually rapidly. I have heard some rumblings of maybe the standards would be lowered in the United States, and those standards are already different in other geographies. So it's going to be an interesting area to monitor to see how it grows and where the adoption comes from my perspective. And that is going to lead us to the roast, the end of our show, our final segment here. And I'm very, very excited to be asking this question. Ray, you already mentioned that Worldcoin launched this week. And for those who are unfamiliar with Worldcoin is a project that is attempting to create proof of human. It does that with an orb, literally an orb, a piece of metal that's just in the shape of an orb that takes a picture of your iris and then creates a hash that is somewhere. And I don't have the specifics on it. So Worldcoin people, you're always welcome to come on our show and explain your project to the rest of the world. It is then intended to be a way in which you could distribute. I've heard it called a massive airdrop network. And obviously with the idea that they're taking a physical picture of your iris and creating a hash, there's been a whole host of opinions on the security side of it, on whether or not this is good for humanity. And of course, it's also interesting that one of the main contributors, perhaps the CEO, I'm not exactly clear on their position, is Sam Altman. He is also the person that is behind OpenAI. So the memes on crypto Twitter, or crypto X as it may be called as of today, are not kind. So I'm going to open it up to you guys. I want to know, and Kodi, I'm going to start with you. How much or what would you need to receive in order for you to allow them to take a scan of your iris?
How much did Suzu said that you need for a reasonably sized house? Was it like 15 mil or something?
I think 15 million. Yeah.
Yeah. So yeah, reasonably sized house. I think that would be enough.
So you're now that's one eyeball. Are you saying for each eyeball you want 15 mil? So a total of 30?
Yeah, why not?
Okay. That seems like a reasonable price. What about you, Ray? Ray, you may still be on mute, or maybe you're just cursing in the background. Ben, I'm going to go to you. How much are your eyeballs worth?
Mine's going to be probably a little bit more than Kodi's. I would want espresso for life, so that might be more in
How much espresso do you actually drink then?
Oh,
wow.
Well, I like to play it out, but in reality, I think I have right now about 5 to 6 shots a day. So 2 shots in every drink, so 3 cups of coffee.
Well, and at the rate of inflation, yeah, in a couple of years, I could see it getting up there. Ray, are you going to sell your irises for less than espresso for life?
I will take a pass, but I like that a lot of people on the internet pointed out that you give your eyeball and fingerprints and location and all other biometrics to your Samsung or your Apple for the face login or for the finger login, and we do the same when we go to the airport and all that. So I will pass. on doing that in crypto? A lot of people do, yeah. Like a lot of people are totally okay to give up their biometric data to log into their phone or bank account or, like auto log in with their fingerprint or their face on their phone. They do that. Maybe some of us do, but then people are like really opposed to Worldcoin. But I'm not going to give away my personal data to some random crypto project for any amount of money at this moment.
Even if Sam asks really, really nicely, he is with one of his AI bots. That's a no. That's a hard pass.
I'm gonna pass. Too much like, Vitalik Buterin made a really good long rundown of the project, and he didn't slam it in the mud. And he said, the need for proof of humanity in the future is a good idea, in a future that will be populated by bots and AIs and sentient robots. Being able to prove your humanity could become a necessity, and Worldcoin has that focus also. So, I don't like their tokenomics at all, token economics. I don't like them at all. I don't like how insiders and market makers got rich off of this, but I can't slag the project, but I'm also not willing to give my personal data to a crypto company right now.
Yes, look, there's a lot of positives though that could come from this, right? Like it could spark kind of ZKPs being put into the limelight even faster now. It's been having a lot of promises, and that would help keep a lot of these biometric scans and information kind of more private, but allowing you to go ahead and interact with the various protocols or platforms that verify that, yes, you are who you say you are. Like that would be a major positive to come out of this if it kind of sparks it. But not to mention, like, this is universal basic income type of project. So there's going to be a lot of financial experimentation that takes place, a lot of lessons to be learned, and possibly ways to create an even better project that has maybe better fundamentals and possibly better hidden intentions, if you will, because I can't imagine that all of the intentions are great. I mean, we saw what SBF was doing. Apparently he wanted to buy an island and escape like a world-ending sort of Armageddon. I don't know what was going on over there, but it seems that a lot of these individuals that claim that, like, I don't think Altman takes any money or something from OpenAI, which opens up a lot of questions. And yeah, I'm a little skeptical, but I think there's a lot of pros that could come out of this, and people could take it and run with it in very positive ways.
And you're willing to
SBF's
sell it
brother
all for a
wanted to buy
lifetime
an
of
island. Sorry?
I said he's willing to give it all for the small pittance of espresso for life. I like it.
Fair enough.
Or an
SBF's
island.
brother, I'm glad you mentioned that. He wanted to buy an island to create a genetically modified, like, superhuman, I won't say race, but a super group of humans. So that really lines up with Worldcoin, doesn't it?
Well, it sounds like he was getting funding from the NIH.
Ooh.
Maybe. Ooh, we just went down that rabbit hole. Welcome to. I have to apologize. I have been watching episode after episode on loop of the Twilight Zone. It's clearly rotting my brain. All right, well, there you have it, folks. Ray says no way, never. We've got only 30 million, I think, for Kodi, and then slightly more, or 3 times as much, because Ben's going to have to be on espresso for the rest of his life. That is what these guys are willing to take in order to scan their irises. In the case of Ray, none at all. That's going to do it for this week's show. I'd like to thank this week's guest, Ben, Ray, and Kodi, for showing up. I love hearing the insights you guys are offering every week. If you enjoyed hearing this, definitely hit the like and subscribe button wherever you're listening, and let us know what works for you. And hey, if you didn't like it, if you thought there was something we should have done better, hit the like button and then let us know in the comments. You can also find us out on Twitter, which I guess is now X. Definitely hit us up there if you can't wait for the week to hear some of the insights. And I'll end this. We are, as we speak, doing a dry run of the video. I'm not sure we're going to be quite ready to release it. There's still a lot of work through, but all of us are seeing the preliminary views, and it looks fantastic. We're super excited to be releasing that. It's going to include our characters, our avatars, and it's going to give you the actual charts that we talk about each week, many of which are proprietary, coming out of, well, some secret platforms that you'll hear more about in the coming days. But if you want to be able to see this when it's live, definitely hit that subscribe button. And that will do it for this week. Have a great week, whatever you're doing in the crypto world. Stay safe out there. And until next time, this is Marconi White signing off.